Morning everybody, it's Chris here from Student Education with the 4 Majors Analysis Update for the 31st of August 2011. Hi guys, just going to start looking at the Euro. I did some analysis last night on our webinar regarding the 4 Majors, so let's see if we have seen any fruition from that. Daily chart, you can see we had a pullback yesterday after a spinning top breakout. Price has tested a prior support and resistance area. You can see 14,500 was touched. Noticeable 1455 is a strong resistance level here in the past. We've had 3 touches now, consecutive touches over the last 2 months, and price reverted to the downside. However, if you look at the smaller time frame, you can still see that we are still swinging higher. CTC is still blue. We are blue here, and as long as price is swinging higher and trading above all the moving averages, we should still look for further positive upside. Price action this morning on the Asian market has been kind of small, trading at the low end of the wick. If you look at the 2 prior resistance levels that we had prior to where price moved higher, let me see if I can just draw a straight line. There we go. Notice we had resistance in this area here, and price is sitting right on that. So we need to see 1, 2, 3, 4 around the 4,500 mark. So we need to see price bouncing on that to go higher. A failure and break lower than that would confirm that we're still looking for bearishness in this pattern, and a break of this intermediate uptrend, well, the major uptrend in this case, would signal further downside movement, primarily because we failed previously at this area here, and this consolidation will, this resistance level here will come into effect and push price lower. So CTC is still blue, so as long as price can stay above 14,500 today, then we should see another reattempt at 45.55. Failure to see that would, and a closed lower would see price reverting to the downside, and price support and resistance levels to the downside being tested subsequently. Intraday, the 4 hour, you can see price is hugging this 50 period moving average. 1, 2, 3, 4. So 1, 2, 3, 4, 5, 6, almost 20 hours of trading above the this 50 period moving average, so acting as a great little support area here. And if we can remain to do so, then we could see that helping price action push higher. You can see the swing highs here depicting on a 4-hour chart. The price is still swinging higher. The only downside is price is hugging this particular line here, so it needs to take the momentum, drive higher. A failure to do so could see price just falling over, because notice you can see at 14,500 there's resistance at this area here in the past, noticeable resistance over the past week or so. A failure to do that, clearly this area here would see, you can see the last stage of the CTC on a 4-hour coming up, which would be the CTC going red, and we had a break below that level. So a break lower and close lower would definitely signal further downside movement on a 4-hour if that was the case. You look at the small time frames, the hourly in particular, there again you can see higher swings going into this little consolidation here, which is good. We do need to see price break and close higher than 14.55. So 14,400 must, because that's a clear support and resistance level in the past. So intraday, price needs to get above the 14,400 and stay there going into the US session if it can. Then ultimately we will be looking at roughly the 1445 or 14,500 mark as our next clear target on this. But you notice the CTC is negative with the blue, so we are in a consolidation downside trend. If you look at yesterday's breakout to the bottom, you can see price it's playing with the 38.2 and the 50% fib mark, which happens to be smack bang where this major resistance and support is sitting. So break and close high on that would definitely confirm further upside movement for the remainder of today. Failure to do so and close low would definitely confirm we're going to see another second continuation likelihood. And if I look at the consolidation area, we could be looking at 60, well the 50 would take us to 1439, 61.8 would take us to 1437, and 100% of the initial move here would take us well below the 143200 mark. Next up is sterling against the US dollar. Good old cable. Same with the euro, we had a pullback. This pair in particular, we had a slight consolidation at the 16,400 mark for consecutive weeks. Then we had a breakout not so long ago, and we wanted to see price heading higher. Ultimately, our target would have been here around about the 16,700 mark to start with, and break higher would obviously seen further highs. That didn't materialize. We saw price pull back after a breakout, which happens 90% of the time, and we saw consolidation here, and we thought, well, great, support at this level. You can see price was supported, but the following day just saw it straight through. This is primarily leading up to Jackson Hole in the States. Friday we had some, we had Thursday and Friday was the meeting with all the big boys financially to try and thrash out deals for both the US market as well as European, and that didn't kind of bode too well, and then we saw price reverting to the downside. However, notice that it's now price is trading at a price support area. So the swing high here, we had another installment, failed to break higher on this upside movement, price engulfed downside, and now it's still sitting above this little uptrend, or the major uptrend in this case. So what we need to do is see price bounce on here to clear, or to reattempt 1645. A failure to do so would see price, if you see a price closing lower than the prior swing, in this case this level here, let's extend that to 16,2800. If it breaks below 16,2800, then we're going to see price trading below the swing, cancelling this swing here, and ultimately our next target would be the prior swing here at 16,1500, and break below that would see clearly the 1600 mark being long-term, psychological long-term support and resistance being the next target, and below that, well, then we've already lost price, because if I zoom out, you'll notice that 1600 has had a lot of support and resistance throughout this year, especially the first couple of months of this year, and then followed through the latter part of June, July. So a break below that psychologically would see a really negative stance on this, and we could look at ultimately the next first potential target being long-term at 15,400 at least, or 15,350 to start with. So got to see a bounce here. The fact that it didn't break higher here doesn't bode well, but we've seen in the past where prices consolidated, and the CTC has seen the first two parts of the rules stack up, i.e. red arrow, red bar. We'll just need to see confirmation of the red on the other side. That will only happen if we see a break below this uptrend. So as it stands now, we're looking for consolidation. If sterling can actually bounce, it's similar to the European, the euro. Notice the 200 period, the institutional moving average acting as a support level over the past couple of hours for this pair. Is it going to help it push higher? If not, and we see a break lower, would definitely confirm that we're seeing negativity in the market, and we should be looking for further shorting opportunities. There are lower swings in this side, this direction. So in this area here, if we don't see a break and close, we could see price being pushed lower, and the CTC is going to show us that. And as I mentioned, 1615 would be our next possible target, because we've had resistance and support here in the past. So ultimately, intraday, break below the institutional moving average, close lower on the CTC, would look at 16,1500 ultimately as our first target for the remainder of this week. Next up is the US dollar Swiss franc. As I mentioned last night on the blog, this pair is in an all-time negative trend. You can see that if I zoom right out, you can see price action is still heading lower. There we go. Price is testing a support area, prior support and resistance area is the 8,300 mark. Notice a lot of support through here, and then resistance, and then price broke out. We did see price clearing a very strong resistance level just recently at the 80 mark, and I did mention we see it close higher than that. Intraday on an hourly and 4 hour, we should be able to getting signals to look at least the 8,300 or the 8,250 mark as our first potential target as we trade higher. And sure enough, that's what's happened in the past couple of days. We've seen price trading higher. However, as it's gone higher, the trading ranges have been quite small, primarily because we have this major trend line governing price action, and we have the 83, which happens to be psychologically a very strong support and resistance level in the past above us. So that's also acting as a strong resistance level. So we have two fronts here. We have the 8,300, as a psychological barrier, and we have the major downtrend also at the 82.50 mark, acting as psychologically as a strong resistance level. So if prices to continue to the upside, we need to find some serious momentum or good news or something like that for the US to punch through. And if we want to see a punch through, it has to be a very decisive candle, a very bullish candle. If we get that, then we're definitely getting a signal from the the big boys out there that we are still looking for further upside movement. Failure to see that would see consolidation with an outlook for possible turn to the downside and a test of 80 to start with. A break below 80 would definitely confirm that we're looking back at the 7200 as our potential target long term. So price needs to, the longer price can hug the upside of this band here, this consolidation band, because it's going into a consolidation band. Like we saw this prior here to the move to the downside. We're going to consolidate now. We're going to see some consolidation. We do need to see an upside candle closing well above 8300. To get that, 8350 would even be better, confirming. Then we find support, and then we see a continuation to the upside. Failure to see that, we might see a couple of wicks appearing as price trades or tentatively dips his fingers into the water, as you could say. We might see a lot of wicks. And then if it doesn't back up, then we could see price reverting to the downside and falling quite quickly back to these levels here. Well, 80 in particular to start with, and then 79, and then ultimately 72. So we are in a consolidation band. We do need to see something from the US Swiss franc happening. We do need to see a clear signal. So I wouldn't be trading this until we get either a bullish engulfing upside breakout or bearish engulfing downside breakout. Last pair of the day is US dollar against the Japanese yen. As I mentioned last night on the video, price has recently broken to the downside, and we've seen price trading lower. However, in the past couple of weeks or so, we've seen this particular pair trading roughly around the 7650, 7700 mark, as it's been consolidating at the low end of a prior support, or in this case, a prior support area. Now it's testing the underside of that. So it's trying to, for arguments, trying to hang on to that 77. I think if we see a negative candle breaking below the 7650, a bearish one would definitely signal that consolidation or that breakout has failed, and we are now looking at a free fall yet again. But as you can see here, there's a clear consolidation band in this area here, and until we get a definite similar to the Swiss franc and the US dollar, we need to see a confirmation from the market, whether it be bearish, close lower, or a bullish upside. If it's bullish upside, then intraday we should be looking for potentially 7750 or higher. Ultimately, the prior swing area here, we saw consolidation at roughly just below the 7850 mark as a potential target, or a bearish breakout to the downside, because CTC is still negative. We don't want to be trading against the trend. If likely, we want to trade with the trend. So market analysis is still negative. So a bearish breakout below this consolidation box here would definitely confirm that we're looking for further downside movement after a consolidation period that's happened over a number of weeks. In fact, a full month of consolidation now. So failure to see that would obviously just see it ranging in this. So like this US dollar Swiss franc, I want to see a clear indication from the market that we got price movement. At the moment now, consolidating. It's useless to trade. I'm not making any money because I'm just wasting time, because time has just gone sideways and I haven't seen any return on investment. So want to see either upside movement for potential capitalize to the upside, or bearish engulfing to the downside. Break below this box here would confirm for the downside movement. That's it, guys. Keep it simple. If you are using the CTC strategy, please use proper money management rules with it. It's important that you apply money management rules to any of your trading strategies or outlooks. It's so important. Keep it simple, as I mentioned. You'll find that you'll do a lot more just by looking for confirmation breakouts from the market. Let the market tell you what it wants, and then you just trade in that direction. You'll find that you'll be less likely to be faked into any trades. You might have missed out the first initial move, but that's what we want to do. We want to be trading the momentum that's produced from the decisions made by the people out there who are investing those large capital funds. So that's what we want to do, is bide our time, be patient, wait for market moves, and then we trade those market moves. Have a fantastic day and trade serenely.